Two companies, two visions, both preparing for what could become two of the biggest IPOs of the decade. In the space of 9 days in June 2026, Anthropic filed for an IPO at a $965 billion valuation. And then OpenAI filed for an IPO targeting $1 trillion. Together, these two potential listings could bring close to $2 trillion in AI company value to public markets if valuations hold. But here's the thing most people are missing. These are not the same company. They're not even the same kind of bet. In this video, the origin story, the business models, the financial reality, and the honest case for both sides. Because understanding the difference between OpenAI and Anthropic may be one of the most important things an investor can do right now. To understand what makes these two companies different, you need to go back to where they both began. OpenAI was founded in 2015 as a nonprofit backed by Elon Musk, Sam Altman, and a group of researchers who believed that if powerful AI was coming, it was better for it to be developed by people who cared about the outcome. For years, it moved quietly. Then in November 2022, it released ChatGPT. 100 million users in 2 months. That is the fastest consumer product adoption in history. AI stopped being a technology story and became a mainstream moment. But as OpenAI grew, something changed. The nonprofit structure reached its limits on how much investors could earn, and the pressure to scale required capital the structure could not support. So in October 2025, OpenAI completed its restructuring for a for-profit public benefit corporation, with the nonprofit retaining control of the for-profit arm. The path to a public listing was now open. In 2021, the then VP of Research at OpenAI resigned. He left alongside more than 10 colleagues, including his sister Daniela. Their concern was not that AI would fail. Their concern was that it might succeed, and that the race to scale was outrunning the research needed to make that success safe. They founded Anthropic with a specific thesis that building safe AI and building commercially successful AI were not in conflict, but that you had to design for safety from the beginning and not add it later. Their flagship model is Claude. And while Claude is available to consumers, Anthropic's strongest positioning is in business and enterprise AI. Two companies born from the same moment with opposite answers to the same question. These two companies made different bets about who the AI customer actually is. One bet heavily on the consumer scale. The other leaned harder into business and enterprise AI. OpenAI announced that ChatGPT had reached 900 million weekly active users in February 2026. And at that scale, ChatGPT is no longer just a product. It starts to look like consumer AI infrastructure, a behavior hundreds of millions of people have built into their daily lives. OpenAI has more than 50 million paid consumer subscribers and more than 1 million business customers. Annualized revenue crossed $25 billion by February 2026. That is the extraordinary part. All right, now here's the complicated part. OpenAI is projected to lose approximately $14 billion in 2026 despite that revenue. Internal projections suggest that the company does not reach profitability until 2030, with cumulative losses potentially exceeding $44 billion before then. The structural reason? Interference is expensive. Every time someone asks ChatGPT a question, OpenAI pays for the compute. Now, at 900 million users, those costs are enormous. The company is reportedly spending well above its current revenue base to support growth and compute demand. The bet is that compute costs will fall and that enterprise revenue is going to scale, and that the consumer mode, 900 million people who already default to ChatGPT, is worth the losses in the short term. Anthropic made a different calculation because instead of chasing consumer scale, it went where the margins are, which is enterprise. A large share of Anthropic's revenue appears to come from enterprise and API usage based on company disclosures and media reporting. Anthropic has stated that a significant portion of its customer base includes major corporations, with Claude embedded across a range of enterprise workflows. In April 2026, for the first time since the AI race began, more American businesses reported using Anthropic's Claude than OpenAI's ChatGPT. 34.4% adoption for Anthropic versus 32.3% for OpenAI. The company projects approximately $26 billion in full year 2026 revenue, with a long rate that has been accelerating rapidly through the year. Enterprise customers are often higher value and more predictable than consumer users. That is the core of the Anthropic thesis. Behind each of these companies is a different set of strategic bets from the biggest technology players in the world. Microsoft has been OpenAI's anchor partner since 2019. In January 2026, OpenAI and Microsoft, alongside SoftBank, announced Project Stargate. which is a $500 billion initiative to build AI infrastructure across the United States. Microsoft holds cloud rights of first refusal for OpenAI's compute needs. The relationship is deep and creates both a strength and a dependency. The Anthropic network, Amazon and Google. Here's where it gets interesting. Anthropic secured a commitment from Amazon for a compute and investment relationship worth up to approximately $8 billion in direct investment, alongside an agreement to access up to 5 gigawatts of compute capacity over time. Separately, Google committed to invest up to $40 billion in Anthropic. It's $10 billion now at a $350 billion valuation, with up to $30 billion more tied to performance milestones. Amazon and Google are both backing the same company. That's not a coincidence, guys. That's a hedge. Both cloud giants are treating Anthropic as critical AI infrastructure they cannot afford to not own a piece of. 9 days apart, both companies filed confidentially for public offerings. Anthropic filed on June 1st, 2026 with Goldman Sachs, JP Morgan, and Morgan Stanley, who are already in discussions as lead underwriters. A public debut could come as early as October 2026. OpenAI filed on June 9th, 2026, targeting a valuation of $1 trillion or more, with a potential listing as early as September 26. Here's where the story gets complicated for investors. 900 million weekly active users is a moat that cannot be built overnight. Now, when people think of AI, they think ChatGPT. That brand recognition is worth something that does not appear on a balance sheet. Enterprise revenue is growing fast, and it's now more than 40% of total revenue and expected to reach parity with consumer by year end. Now, if compute costs fall as AI hardware improves, then the path to profitability gets even shorter. Stargate could give OpenAI better access to dedicated AI infrastructure at scale if the project delivers as planned. Enterprise AI is where the durable margins are. Businesses pay premium prices for reliability, safety, and API-grade performance, and they do not switch once easily integrated. The Amazon and Google backing provides Anthropic with compute infrastructure security that most AI companies cannot access. Both cloud giants have a strategic incentive to see Anthropic succeed. The safety positioning matters in regulated industries, finance, healthcare, legal, government, where trust is a purchasing criterion, not just a feature. Now let's flip the lens, because the bull cases are compelling, and so are the risks. A projected $14 billion loss in 2026. Cumulative losses that may exceed $44 billion before profitability in 2030. That's an enormous amount of capital to burn through, and it's a long time to ask investors to wait. The compute dependency is structural. OpenAI's business model requires that inference costs fall significantly. If hardware improvements slow, the economics don't improve on schedule. At a $1 trillion valuation, investors are betting that everything goes right, costs fall, enterprise scales, consumer loyalty holds, and no better model displaces ChatGPT. Okay, guys, that's a lot of variables. Anthropic's valuation went from $380 billion in February 26 to $965 billion by May 2026. That's a tripling in approximately 3 months. That pace of valuation expansion is extraordinary. And it means IPO investors will be buying at the peak of a very rapid ramp. Revenue is accelerating, but the full year 2026 projection of $26 billion means the company needs to sustain that momentum throughout the year. Amazon and Google are both investors. That creates alignment with Anthropic's success, but it also means Anthropic's largest cloud customers are also its largest shareholders. And that creates government complexity at IPO. So what do you actually do with all this? The first thing is to understand that OpenAI and Anthropic are not competing for the same investor. OpenAI is a bet on consumer AI, on ChatGPT remaining the default tool for hundreds of millions of people, and on eventually monetizing that scale at a profit. It's a high-risk, high-reward bet on whether consumer AI becomes as profitable as social media. Anthropic is a bet on enterprise AI, on businesses paying premium prices for reliable, safe API-grade models, and on that segment growing faster than anyone currently projects. It's a more focused bet with different margins and different risk. They could both win, but through different customer bases, different margins, and different risks. But there are real questions on both sides that IPO investors need to sit with. For OpenAI, can a company reportedly spending well above its current revenue base reach durable profitability? And does the 2030 timeline hold? For Anthropic, does a valuation that tripled in 3 months leave enough room for public market investors to generate returns? What we would caution against for both is buying based on the story alone. Both of these companies have extraordinary narratives, but narratives are not the same as unit economics. And at near $1 trillion valuations, the margin for execution error is really thin. Both companies will exist after their IPOs. Neither opportunity is disappearing after the listing date. The real question is not which AI company is more impressive. OpenAI is the scale bet, Anthropic is the margin bet. And the trillion-dollar question is which matters more in AI, the tool everyone uses or the tool businesses pay the most for? That question does not have a settled answer yet. That is exactly what makes this moment so interesting and so risky. If you found this breakdown useful, please subscribe. We cover stocks, companies, and the trends that move markets every single week. Drop your questions about OpenAI or Anthropic in the comments below.